The following segment is sponsored by Endeavor Silver, trading on the New York Stock Exchange Amex under the symbol EXK, on the Toronto Stock Exchange as EDR, and on the Frankfurt as EJD. Endeavor Silver, a silver producer focused on growth. We're joined now by the silver guru, David Morgan of the Morgan Report. His website is silver-investor.com. Mr. Morgan is one of the most preeminent world experts, not just in silver, gold, and precious metals, but related issues in the mining sector. David, welcome back to the Opportunity Show.
Ellis, it's great to be with you.
I'm looking at the chart for silver equities on kitcosilver.com, and I'm noticing that more of them are up than down today.
The truth of the matter is that the mining equities really have lagged the bullion for some time. It does concern me, but not to the level that it would if there weren't the silver ETF and the gold ETFs available. I think since the advent of those two structures, there's been a lot of money that would have gone into the mining equities that are not in the equities, that are in the exchange-traded fund. And as a fund manager, you really can't knock them for doing so because they're very liquid. You don't have any of the problems relating to a mining equity. I mean, whenever you have a mining company, you've got potential problems. You've got management, grades can degrade, you can have labor strikes, you can have water in the mine. I mean, most of these things are worked through, and not every mine has a problem. It's just there's potential. Whereas if you buy the bullion itself, then you don't have any of those issues. All you worry about at that time is what's going to happen to the price. Is it going up or is it going down? So because of that, I think you've seen less interest in the mining shares. I'm actually more bullish on them than ever, and the reason being that I believe this time around it's going to be harder and harder to get the physical bullion as time marches on. And because of that, most people will prefer to go into the mining equities either because they can't get the bullion or it's a lot easier to do so. And as this market heats up more and more, people are going to flood, I believe, into these mining equities. So this may be the precursor to the next leg up. I certainly believe it could be.
You like to purchase the bullion when the prices have gone down. Do you expect that we've hit the bottom a while back, and given that there might be more flooding into both equities and the bullion itself, are you accumulating any silver at these levels?
For bullion, actually, you're partially right. Certainly I try to buy on the dips. But for the actual metal itself, if you're not in it, I think almost any time is the correct time. We've already seen an instance where it was difficult to get the physical gold and silver, and during that time frame, there was a huge premium or big disparity between the paper price listed in the futures exchanges and what you actually had to pay a dealer that had the metal. I think those days are going to reinforce themselves in probably not the distant future. As far as another pullback or not, I'm a little hesitant. I still think there's a possibility we might get another good pullback in the mining equities and also the bullion itself due to the fact that the stock market itself is very, very overvalued at this time and looks like a setup to decline. If I'm right about that, then a lot of this money that's in the paper markets of the SLV and the GLD and the futures markets will sell off those paper derivatives of gold and silver, and since that market still overwhelms the physical market, you could see the metals get hit pretty hard. Will we see a new low? I doubt it. I don't think you're going to see $14 silver. You might see 15. I don't know. As far as gold, it's really held the $1,000 level. I have some very good friends that I won't name that are pretty darn good at technical analysis. I've maintained all along that we've seen the $1,000 level breach to the upside, and that level is going to hold. Could it pierce it to the downside? Yes, it could. But every day that you march above a $1,000 level, that becomes more and more and more supportive of the price of gold at $1,000 or higher. So I think we're in new territory. I think we're, again, getting poised for the next leg up. I have accumulated some cash, and I'm starting to move into some of that cash into a trading position right now, and I feel fairly comfortable doing that.
So you're looking at companies that have more than one asset in the ground?
Well, we look for value wherever we can get it. I mean, it's not that difficult, really, to look at the top-tier cash-rich unhedged mining companies and look at their income statement and balance sheet and get a pretty good idea of who's who. Within the majors, there's still these growth stories, and then there's the possibility. I just posted an article on the site today about the majors looking for more assets, so if they can buy assets in the ground cheaply, then they've added to their resource base. So there's all kinds of things that can happen in a major that actually makes a company superior to another. So we look at the best 5 or 6 on a monthly basis, and our basic premise is that you can buy probably 5 or 6 that hit the top tier category, and there's probably only 10 or 12 that have ever done that, and hold them through thick and thin. So that's your core position. And within that core, if you're going to trade, you can trade, the bigger equities as well, or the SLV or GLD or options or futures. I really don't care. As far as the juniors go, we also look for value, but that's much, much more difficult because within the junior you have basically green sandstone projects, which are, we got a property and we've never drilled it and we're going to try to find something, which is about as base as you can get, to the model I prefer, which is a small producer with exploration potential, which is most of the list. But we do take some long shots from time to time. Some have paid off, some haven't. But all the time we're looking for value. We're looking for value of the management. We're looking value for where the property or prospect is located, proven track record, or something along those lines. We want to get as much variables known as we can, so there's as little unknowns as possible. Obviously, in this business, especially on the exploration side, it's extremely difficult to eliminate a lot of unknowns. You can't. But it's also an area where you can get great wealth. The problem is that people bet on the fact that you can get great wealth, and you shouldn't bet a lot on that, because certainly it can happen, but the odds are not extremely in your favor. So the way to approach it is to take a basket, in other words, probably 10 equity. You can buy 100, you can buy 1,000, but you'd be so diluted that you'd probably catch the one or two huge winners, but you'd have so many losses in the other, thousands of shares or companies that you own that it wouldn't do you any real good. So certainly you don't have to get the number one and number two position with the best performing junior mining companies. Aurelian is one that was huge. We didn't own it. In fact, Keith Barron and I are very close, and I met Keith very early on in this cycle, and I thought very highly of him, thought very highly of his company. I just was not that partial to Ecuador, and because of my bias, we never really took a very hard look at that stock, so we missed that one. But we hit Western Silver, which was huge as well. So you don't have to get them all to do really well in this sector.
Well, one of the companies you've done really well with, they are a client of the Opportunity Show, and you're also a shareholder, is Endeavor Silver. And they've got a track record of picking up properties in Mexico fairly inexpensively during the last few years. They're one of the top producers right now as far as junior minings are concerned.
I like the Endeavor model. I've been to both of their projects, Guanajuato and Guanaceví. They run a very tight ship. As you said, I am a shareholder. The share price has been beaten up somewhat. They're better at getting the word out on their company than some others. You have a mine that's producing and doing well, and you don't tell the world about it, and you're worried about your shareholders not getting the benefit of that. Basically, I look at management for that, because you do have to get the word out to some level, and Endeavor does that. I don't think they overdo it, but that's my opinion. I like the company. It does have growth potential still. They have worked very diligently to get their price down on production costs of the metal, and they're doing that. And I want to just follow up on the previous question, Ellis. Do we look outside the silver space? And the answer is yes, we do. We've looked at the moly space, the copper space, actually nickel. So we are not silver only, but the truth of the matter is that's our main focus. So if you are partial to the silver market, you certainly would want to consider the Morgan Report.
Let's talk about your website, silver-investor.com.
We've made the website a little more user-friendly, I believe, and it's pretty apparent now that it's a membership site, although there are a lot of free articles on there. I put links up on the site every day. We also have a lot of free articles I've written over the last decade. Most of them are timeless. You can go back and look at stuff I've written, 5, 6, 7, 8 years ago. It's still pertinent, maybe not the price levels, but I don't do a lot of technical work in the public domain. I do that more for the private research or the paid subscribers. It's a good place to get an education, especially on silver. There's not a lot of sites that specialize on the silver market, and ours does, although it's much broader than that. As you say, it's money, metals, and mining. We look at everything, but most of the articles I've written do cover the silver industry or the silver mining shares or the silver as a commodity or as an investment. If you're looking for an education for free, you certainly could come to the site. I would really advocate anyone that's new to the sector to get on our free mailing list. Doesn't cost you a dime. You can get off at any time you wish. And get the 10 rules of silver investing. These are rules that will really help you, especially if you're a beginner or a seasoned professional, but particularly a beginner, because it gives an outline to not make a mistake. The worst thing you want to do is get all enthused about the silver market, dump every cent you have into the silver market at the wrong time, and then have to wait 3 months, 6 months, a year to come back because the silver market goes down from the day you buy it. There's a lot smarter ways to do it, and I approach that and tell you exactly how to approach the market in these 10 rules of silver investing. It's basically for the benefit of the reader. It's a quick read. Get one rule per day with my comments on it. It's actually a bigger read than it was in the original book. and something that I'm very happy to provide to the investment community.
David, as always, it's been a pleasure speaking with you on the Opportunity Show. Thank you so much for joining us today.
My pleasure, Ellis. Thank you.
This segment has been sponsored by Endeavor Silver, trading on the New York Stock Exchange Amex under the symbol EXK. The Toronto Stock Exchange is EDR, and the Frankfurt is EJD. Endeavor Silver is a silver producer focused on growth.